welcome to the last trading day of 2024. What a year. A year every consumer had to deal with inflation. They felt the sting of inflation, and we saw the Monetary Policy Committee, in turn, they raised monetary policy rate by about 850 basis points in 2024 to tame inflation. And 2025 comes tomorrow. I guess the battle continues, but we'll see who's going to win, going forward. Let's get to the stories that set your agenda now. Starting with oil prices, we'll see Brent futures, that rose about 60 cents this morning, $74.59 a barrel. So we're seeing bullish moves there in the market. The bulls are back right there, trying to take oil up 0.8%. That's for Brent, 0.93%, almost 1% up for U.S. grade WTI, $71.61 a barrel. Later on the show, we're going to find out what drove sentiment in 2024 and what to expect in 2025 for the oil market. Let's get a check on the FX market now. Starting the week, we see the Naira appreciated by about 5 Naira. Big bullish move there, 0.10%. For the Enfirm window, did close previously at 1,538 Naira to the dollar. And we see a big move up there, 1,536, get about 5 Naira. That's for the Enfirm window. For NAFEX, 0.32%, up 1,544 Naira to the dollar. That was the close. So we're seeing the Naira strengthening for this. Let's see if that continues for the last trading day of 2024, which is today. Maybe we'll see a monster rally that takes us sub 1.5. Maybe. We'll definitely see. But we see it's still budget season here, and Governor Siminalayi Fubara was presented the 2025 budget proposal of 1.1 trillion naira to the Victor Okojumbo-led Rivers State House of Assembly. Governor Fubara described the appropriation bill tagged Budget of Inclusive Growth and Development as a blueprint for consolidating the achievements of his administration in 2024 while charting a new course for sustainable development. Take a listen.
Today, we are presenting a budget that would empower us to consolidate the past gain, stimulate further investment into our economy, and take our dear state to the next level of economic growth, social progress, and shared prosperity. Mr. Speaker, permit me to express my profound gratitude to the good people of Rivers State for their unwavering support, prayers, and trust over the last year and 7 months. I have had the privilege and honor to be a chief servant.
And in Imo State, Governor Hope Uzodinma signed the 2025 appropriation bill into law following its speedy passage by the lawmakers of the State House of Assembly. Speaking at a signing ceremony of the Government House in Owerri, the Imo State capital, Governor Uzodinma says the budget will better transform the subnational, especially in the implementation of capital projects.
The alignment between the executive and the legislature in providing critical and valuable infrastructure to the people of Imo State. So with a total budget of 807 billion for the year 2025, it means that the opportunity for growth, the opportunity for prosperity, and the opportunity to create and bring into reality the new Imo State is by the corner.
All right, there you have it. I guess 2025, we'll see how all those spending plans and revenue plans, play out. So our first conversation now to unpack the commodities market, but we'll start with an industry whose service cuts across every other industry, and that's telecoms. The drama continues on tariffs, to raise or not to raise. Let's bring in Dumebi Oluwole now, senior economist of FDC. Join me right here in the studio. Great to have you,
Great
Dumebi.
to be here, laddie.
Yeah, so we got that breaking news that the Nigeria Communication Commission actually gave the nod for tariff increase for the sector, but that was debunked, later on. Yeah. So we're here now. It's been a long time coming. We've seen everyone talk about, most experts say it's time. Yes. I'm sure consumers are not feeling that same
way
vibe.
Yes, exactly.
At this point. But talk to me about,
yes, I mean, you've already started by actually talking about what is happening. So basically, there is conversations around tariff reviews or not to actually have the tariff reviews. And by tariff reviews, we mean an increase, right, in the data subscription.
It's not going lower.
Because no, it's not going lower. So call subscriptions, call rates, data subscription packages, looking at those costs actually increasing. And the reason why this is happening, because we do have the telecom stakeholders, that's the Association of Licensed Telcos Operators in Nigeria. We also have the MNOs, Mobile Network Operators of Nigeria, talking about the fact that they need to ensure that their costs are reflective, and that their prices are reflective of the costs that they're significantly incurring. And we do know what has led to that over the last course of the year. Diesel prices are higher, petrol prices are higher, infrastructure deficit is still impacting their ability to, ensure some level of increased productivity. So that's about what is happening, right? And setting the context, we do know that there was a review some 12 years ago in 2013. That was when the first review happened, and the NCC and stakeholders, had that conversation, and there was a wide band for increasing, for instance, call rates, there was a wide band for that, where the tariff was increased from what it was to about 60 naira to a kobo per minute for a phone call. And the band was actually wide to actually accommodate an increase in call rates for up to about 50 naira, right, per minute. And as of today, that is not exactly what is happening, in the sense that we do not have any MNO actually charging about 50 naira per minute. And we do know the reason why.
Correct me if I'm wrong, 2013, the naira was quite stable.
Of course.
And strong.
Of course.
Inflation
was not this high.
Right.
Yes, exactly. So that's part of what is happening, forcing the MNOs and and Altons to actually have this conversation and bringing it back to the table. So in this case, we do know that competition is one of the drivers as to why we're not seeing any MNO charging up to 50 naira per minute for a phone call, right? But again, we also know that we have seen a lot of service downtime over the last couple of months. With when you make a phone call, you realize that my network isn't going. Your data services are not as good.
First time, most of the time.
Exactly.
So we're seeing a lot of that. The person will say, "I can hear you, but you can't hear me."
Exactly. So these are some of the issues. Even paying for doing cross-border transfers, we're having lots of issues. Even banks as well, bank networks, which are also connected to some of these services, are also heavily impacted, right? So that's one of the reasons why we're having. So we've set the context. We do know what is happening. Now, what is the implication of all of this, right? And we're going to assess this in two ways. If the tariff is actually increased, what we do know is that the prices of this data subscription and call rates are also going to increase. It means that consumers will pay more. And there is a compounding effect on inflation with that, because in the consumer basket, data is also part of it. And people do earmark resources, they earmark their income, a portion of their income, to actually pay for this service, alongside food, transportation costs, which we also know is also higher. So what this means is that consumer disposable income will also decline, right? Because people are now paying more for the services that they are getting. It also means that there will be a compounding impact on inflation rate in Nigeria, which is already at 35%, approximately 35%. And but again, when we look at it from the lens of productivity, what it also means is that subsequently we should expect to see an increase in. We should expect better service, right, from this network provider. We should expect that. It means that when you make a phone call, you should not have to say, "Oh, hello, I can't hear you," things like that. We should also expect to see the trickle-down effect of better services on other sectors of the economy that are heavily linked to these network providers. So from banking services to the digital payments ecosystem to aviation, right? So we do know that we should be able to see better services from all these other linked sectors to telcos.
But I guess there's tariff increase and there's tariff increase.
Exactly. So that's where we're going to in terms of like how this should now be implemented. So, but the other part of the implication where I was talking about is if it is not implemented, right? We do know that these conversations, this policy ambiguity, this back and forth will continue happening. And what that does for investors, that there's some level of decline in investor confidence towards the telco sector, which is extremely important right now when we're looking at technology implications, we're looking at all of that. And if all of this continues, it's not exactly a positive light for investors, which we do need to come into the sector and also come into Nigeria generally, because investors don't look at the economy in isolation. They do believe that if this is happening in one sector, and we've seen this in the oil and gas sector, we've seen the downstream oil and gas, we do expect that it will happen to other sectors, and we will be forced to keep approaching investment in the economy with a wait-and-see lens, right, which is not exactly what we need right now. And then again, now looking at the way forward, right? Number one, the implementation of this. If we decide to go ahead with the tariffs, the expectation is that we do not implement it by just ripping the Band-Aid off. It's extremely important. We've seen what has happened with the reforms in 2024, in 2023, and it will be a fallacy if we do go back that same route. So the expectation is that with the NCC's stakeholder conversations, using data to actually, decide on how best to on what the tariffs should actually be, on what the new ban should be, and the 3 months notice that they do expect to give to the public.
Because these are consumers that are dealing with Band A. If you're looking at electricity, they're dealing with PMS prices.
Exactly.
So what are we looking at here? 100% increase?
So we do not know that right now. The expectation is that all of that will be communicated with the public, right? And it has to be communicated to the public because if it's not communicated, people don't know what to expect, and we'll just begin to see a lot of panic around what is going on in the economy. And we do not want social unrest, right? Because when you do too much, there's only so much people can actually take. So again, the important thing is on how this is implemented. That staggered approach should be the case, and ensuring that it's appropriately communicated to the general public on what is going to be done and how it is going to be done. Whether if it's going to be done in phases, we should know about that. So the implementation, communication, extremely key. Policy ambiguity as well is one thing that I do expect that policymakers in this regard completely start taking care of and ensuring that they no longer happen. And the reason is because, again, like I mentioned, the implication of that on investor confidence. We can't keep airing our dirty laundry outside, right? Let's have these conversations and make sure that even if there's going to be back and forth, right, which is normal. The expectation is that we do this by ensuring that there is clarity on what needs to be done and what body is saying what, right? Let's have those conversations and let's make sure that they're cohesive. There should be harmony in the entire sector.
I'm talking about the entire sector.
Yes.
We know, or we've heard, there's speculations that the satellite internet service provider,
yes,
that's Starlink,
yes,
they might have to go ahead to...
Exactly. So I do think that that was something I didn't mention in terms of what exactly is happening and context. So because we do know that Starlink is going to increase their subscription rates, I think, from January 27th next year, and they most likely might have to go ahead from the NCC. We do think that there is the possibility that the MNOs and Alton is also speaking up because we're seeing that happen, right? Remember, Starlink is satellite related. They don't necessarily have an infrastructure on ground. So the costs that MNOs and...
So why are they increasing?
Yes, I mean, we all know what is happening in Nigeria. It's very possible that there's some level of infrastructure involved for them that is causing them to increase, right? Increase their data subscription rates. But regardless, what this means is that if the NCC might be approving that for Starlink, there should be conversations for MNOs that are experiencing a lot more on ground here. So from how much their taxes are increasing to their cost of operations, right? So their prices need to reflect that. So, and my stance is this: if we're going to increase these tariffs, it's okay if we do them, to be very honest, because we do want to ensure that productivity is the lens at which we're looking at the economy in the long run or in the medium term. And if productivity is involved, we do know the linkage first, like I mentioned before. So if we're going to do them, let's just do them properly. So that's where
right, because at the end of the day, we have to consider, the consumers.
Of course.
Also, we're trying to get more people
yes,
into, using these services. Yes. We don't want to kick them out.
Exactly. And I think I just want to mention that just from looking at this, you see that they have lost a lot,
right,
cumulatively over the last couple of of years. And remember that telecoms right now is one of the major drivers of GDP growth in Nigeria. Even looking at the latest GDP numbers, we do see that they contributed a lot more to GDP, telecoms and the financial services sector. And imagine a linkage sector like financial services, which is also dependent on telecoms.
Right.
If telecoms is losing, it means that financial services might also lose.
So
and
it's
it means
a situation where if they go down,
a lot of other sectors will also go down, and so there's a huge implication on GDP growth. And that's why I mentioned that productivity is the lens that we should be looking at the economy through, because that will determine the kind of approach we take to ensuring that companies are actually producing as much and their services are better, and then we also use that lens to determine the policies that we create for them.
All right, let's pivot now. Talking about going down, we know commodity prices did rise before Christmas. What are we seeing now?
I mean, we're still seeing that mixed trend. Prices are not exactly the sweetest.
Right.
But consumers are still spending a lot more. We're still seeing price of rice still remaining high, ridiculously at 110,000 naira per 50 kg bag. But we also know that retailers are also resizing these bags. So we have 25 kg, we have the 5 kg now. We're also seeing 1 kg, so that people are able to...
Next thing, sachets.
So people are able to actually, buy these commodities. We're also seeing that the tomato prices are high, pepper is actually down, and remember, the seasonality is also impacting some of these commodities, seasonality. So we're looking at planting season for some commodities, which is this Q4. We do expect that going into by March next year, where we're seeing like harvest season, we might see an increase in some of these commodities that should probably bring down prices.
So there should be a cooling in January.
Yeah, we should see some cooling, but then that cooling will also be because of slow demand.
Right.
Remember, people are not consuming as much, and there's a lot of there's a little bit of consumer resistance happening here. So with that in play, coinciding with the possible increase of some of these commodities due to the harvest season, right, we do expect that prices might come down, because remember, we're coming from a period where there was still some flooding in some of the key producing states late this year, and that would still keep having an impact on commodity prices. I think the key thing here to really watch out for would be government interventions towards food production in Nigeria, ensuring that some of these recurrent issues like flooding are significantly addressed, insecurity as well. I know this is almost sounding like what we've been hearing like since God knows when, but the reason why we're talking about this a lot more is because we are deciding we're embarked on reforms, and there's only a lot more that the people can take, right? And we need to do more to ensure that food inflation specifically, which is the biggest driver of inflation in Nigeria today, is significantly declined. And increasing interest rates won't solve that for us. It's ensuring that the infrastructure, ensuring that we're reducing post-harvest losses, logistics costs are significantly reduced, and that's talking about now the train connectivity that the government has been talking about, ensuring that these things are actually working to make sure that food prices go down. And if food prices begin to go down, we'll definitely see.
And interestingly, there are drums of optimism out there for 2025.
Yes,
I just hope we've learned
our lessons
from 2024.
And make sure they don't repeat themselves.
Into the new year. Thank you so much, Dumebi. Always great having your perspective.
Thank you so much for having me.
All righty there. We'll take a break now. When we come back, we'll get a review for the fixed income market. That's in a moment. Please stay with us. All right, let's discuss the key developments in Nigerian financial markets this year. We'll delve into the impact of the OMO auctions, analyze the relative stability of the FX market, with the NAFEX rate hovering around 1,544 naira to the dollar, and explore the outlook for Sukuk issuances in 2025. Well, joining us for this conversation, we have Akbawero Putu. She's a chief dealer at Lotus Bank. Great to have you on the show. Good morning.
Adi, thank you for having us on the program.
It's great to have you. Compliments of the season. So, I believe yesterday we had an OMO auction. Talk to me about how most of the OMO auctions have impacted liquidity, interest rates in the Nigerian money market. That's throughout 2024. Let's take stock now.
Okay, so like you mentioned yesterday, there was an OMO auction that was issued by the central bank, and we know this is actually done to mop up liquidity from the system. So a total of about 500 billion was issued, and we saw a subscription of over 900 billion, but the sales still remain 500 billion. What is interesting is the rate at which the one-year paper closed at. It closed around 23.95% level, which is really high for investors coming into the market. What that means is that the yield on that 23.95 is about 31%, which is really high when you look at where inflation is at 34.60%. It's really good return for investors, and we've seen that play out throughout the year. We've seen high yield interest rates in the market, so investors are actually looking at good return for their funds. So the alternative when you're not investing in high income security is to buy FX. And like you mentioned, the NAFEX rate is hovering around 1544 naira to the dollar, which is actually stable compared to where we've been coming into the year. So we've actually seen good rates in the fixed income market trading this period.
Right, so I guess investors almost beat inflation in 2024. That's in the market.
Yes. So like I mentioned, the yield is quite high. It's around 31%, which is very good. And you had one presenter, one guy who was on the program earlier, saying that banks were, or investors were getting good returns from their investors. And this is actually making people shy from going into the agricultural sector to invest in the real economy. Because if you can actually get 31% yield from your investment, is actually safe for you to put your funds in fixed income securities, and which the banks are actually doing, and investors are actually pricing their deposits towards this yield.
How do you expect the CBN will utilize OMO auctions in 2025, given the current economic outlook, and inflation trends?
Okay, so like we know, OMO auctions are actually used to manage liquidity in the system. So it's going to be a function of liquidity that comes into the market. Coming into the first quarter of 2025, we know that the NTB, about 5.1 trillion, is expected to mature in the first quarter of 2025. We will see the funds actually being rolled over like they've done. We've seen the budget for 2025 about 4.9 trillion, which is way above what we came into 2024 with. The capital expenditure for the federal government is about 14.7 trillion, which is a lot. So we would actually see a lot of auctions in the market, because there's going to be huge borrowing, huge demands, and we will see this rate hover around this above 20% levels. Like I said, it's good return for investors. The central bank is going to continue to try to conduct more OMO auction to manage the liquidity in the system. If you have fewer funds in the market, it means the demand or pressure on the FX market would actually be reduced. So we'll actually see this OMO continuously happen in 2025.
All right, you did mention the FX market earlier. We've seen, stability for the NAFEX rate around about 1,544, and today is the last trading day of 2024. What opportunities are you seeing, in this market, going into 2025?
The central bank has done a lot with the B-match system that it came up with on the 1st of December. We've seen stability in the FX market. The rates have been hovering between 1,530 naira to 1,540, 1,545, which has really been stable, coming from where we were in September and October, where there were a lot of volatility in the market. So we've seen investor confidence in in the market right now. There's so much supply. The supply outweighs the demands in the market. So right now, if you come into the market and you're actually looking to fill up your demand, there's a lot of liquidity. And kudos to the central bank with the B-match system that they've come up with. It's created a lot of transparency in the market. We've seen stability in the FX market, and with the budget of the federal government going into 2025 around 1,500 naira to the dollar, we expect to see this come into reality because we are very close to that mark right now. And the central bank has consistently come into the market as a player to see that we meet customers' demands at every point in time. So it's actually a reality for the market. We'll continue to see the rates appreciate coming into 2025. We hope that 1,500 naira to the dollar is realistic, and I'm hoping that we'll get there.
Yeah, hopefully sub 1.5 today. I'll definitely be looking forward to that. But, given the government's borrowing needs, we've seen the budget for 2025. How likely are we to see Sukuk issuances in 2025?
Okay, with 49 trillion, with a 49 trillion budget, and then with about 14 trillion going into capital expenditure, yes, we are positive that we'll see a Sukuk issuance coming into 2025, especially for us in the non-interest banking space. This is where we usually we play largely. We didn't have an auction in 2024. It was a strain to us because when we have excess liquidity, these are where we deploy our funds into. So we expect that with 2025, we will see borrowing in that space because the Sukuk bonds are actually for capital projects. So we have a lot of construction coming into the year, and we know the government actually has the infrastructure bond which they've come up with. But we expect that there will also be a Sukuk issuance in 2025. So the non-interest banking space and other investors, it's not just for non-interest bank, even the conventional banks, they actually play in those space. So we expect that in 2025 there will be an issuance. Last auction, which was in 2023, was over 350 billion. So I'm expecting trillions on the Sukuk issuance coming into 2025.
And with the expectations of trillions, what are the potential benefits and challenges of increased Sukuk issuance for the Nigerian capital market?
So for the last auction, which happened in 2023, the rates for the 10-year paper was around 15.75%, which is quite low when you compare it to what the conventional bonds and the federal government bonds are actually trading around 22% levels on the 2031 bond. So if there's going to be a new issuance in Sukuk, whatever the tenor is, we expect that the rates will go around 20% levels or higher than that, because the investors we see playing in the Sukuk market and in the conventional banking space are actually the same investors, and they actually expect the same level of return on their investment. So we expect to see higher yields coming into 2025 in the Sukuk issuance space, which will be very good for non-interest bank, because then we get to deploy our excess liquidity into that space. We get good returns on our investments. We don't have a lot of opportunities of placing funds, our excess in the interbank market. So holding these securities and investing in real capital projects is actually good for us and the economy at large.
Right. Thank you so much. That was Akpare Oputu, Chief Dealer at Lotus Bank. Thank you for sharing 2024 with us, and I'll see you in 2025.
Thank you, Ladi.
All right, that's the show today. Markets are open right now, but it's going to be a thin trading, and we'll tell you what's happening. That's 1 p.m. on Business Incorporated for the closing gong. That's the last trade of 2024. That's it from me on Business Morning. I'm Ladi Williams. I hand things over to the Sunrise Daily team.